Hi, so it's August 2026, and I just wanted to give you a quick update on the Irish electricity market based on data up to July 2026. As always, we go through four main headings around generation, prices, dispatch down, and the developed market. And the generation market's been very interesting in the last month. Obviously, we've had a lot of really good weather, so we've had less wind. So wind is down to around 21% based on CMO data of meter generation for the month of July. Solar is up to about 7% and gas is about level. So what really filled in the void in the last month has been interconnectors. Interconnectors have made up about 22.5% of the generation levels in the Irish electricity market. And it just shows you how what a good asset they are to have, but also the vulnerability of Ireland if one of those assets was to be on outage for a long period of time. We've done a bit of a performance analysis on how interconnectors performed last year. We've done that with Bayesian Energy. It's shown basically that the interconnectors reduced electricity prices by about €6 per megawatt hour in 2025, so around 5% reduction. And I'll share a link about some of that analysis that we've done on how interconnectors have performed. We also look at the overall generation levels. We compare that to July 2025, and we can see that we're down 3.1% from July 2025 to July 2026. Now we have to get some more data to see if that's a structural issue, that demand is actually falling, or is it something transient that with a lot of the on-site solar that we're seeing installed, is that reducing the demand that we're seeing in the SEM, the electricity market. So that's something that we'll be watching closely for the next month or so. We also look at the electricity prices. At the start of the year, we were saying that there was going to be a glut of LNG that was going to put down prices. Then geopolitical issues again pushed prices up due to shortages of gas. Those issues look to be resolved. Now they look to be coming back into the fore again. But the upshot of all that is that the electricity prices so far year to date are €133 per megawatt hour. And if the geopolitical issues globally maintain, there's a risk that prices keep on increasing. So that's definitely something to watch. Another thing that we watch closely is dispatch down. Last year we had overall dispatch down for around 14%. This year it's up to 16%. The main driver of that is constraints. It's around 9% of that 16%, with the remainder from curtailment. We saw recently in Ireland that Jack Chamber highlighted three energy projects that had to be fast tracked. One of those was the North-South Interconnector, but these projects should have happened yesterday. And if those assets start coming into play, we can see the dispatch down levels reducing. It's also been a really interesting time in the development market. We've had 162 megawatts of wind come into planning. One of the most notable sites there is the Cool Glass application that was previously had a major legal challenges, but they have surpassed those, and now it's come back into the planning process. We also had a large 680 megawatt OCGT facility in Fingal, and just showing the importance of that energy asset in the power sector. Very quiet month for solar recently, but we've had two big solar projects come into the fore with over 300 megawatts from two new entrants. So definitely a space to watch and track.